Hello, traders, and welcome to today's live event. We have the FOMC statement pending. That'll be coming up in about an hour and a half or so, 2 hours actually. So we've got that to look forward to. Right now, everyone's expecting a 25 basis point rate cut, 97% chance that's going to happen. The big question is, does the Fed indicate that there's another rate cut possible this year? So that's what we'll be watching for in the rhetoric. Harry, hello. How are you doing?
How you doing, Pete? Exciting day. It's going to be. I think this is the calm before the storm right now. Depending, I don't know how big of a storm it's going to be, but like you said, a lot going on, and of course, we have major earnings tonight, right? We have a lot of big companies starting to report: Meta, Microsoft, Google. Tomorrow's Amazon and Apple. So some pretty big names out there that are going to be putting up their numbers.
This is where the rubber meets the road for sure. As they say, earnings and interest rates. The market is about earnings and interest rates. So we get both of them in a 24-hour period. So there should be some activity. Of course, the market, I've got that up on the screen right now, and you can see, let's zoom out even a little bit more. Since that April low, this has been straight up. Dips have been brief and shallow. If you didn't just go in and buy these dips, then you kind of started to miss the move. You didn't have long to wait around. So it's a one and done, just one day drop and then off to the races. So this type of move right here, though, is a little risky to participate in because you've got these gap ups on light volume, gap up on light volume. Asset managers don't like to chase, and so they have not gotten a lot of volume off. You can see how low the volume is in here. So gains like this, I'm not saying that the market is going to roll over right now, but they can easily be erased. So this is not a high quality move higher like you would see when you've got this type of overlap and steady progress. So I did want to take a look at my last pick that I had during our previous live event. It was GLW, and that was back in here. And you can see that post earnings, the stock is doing extremely well today. So it's breaking out of this compression and it's continuing to push higher. This could be my pick again today. Now that we are past that earnings announcement, I don't feel like we're chasing because we are buying just after this breakout from a longer term compression when sellers have been able to unload what stock they wanted to. And now we've got continuation on the upside. So I like GLW. Harry, do you recall your pick from the last live event?
I do. It was Apple. I suggested taking
Apple.
an Apple long. I believe it was at around 257 when I suggested that. So it's gone up $11 since that time. Obviously, earnings are tomorrow. So if you are still in that long, this would be a great opportunity to take profit without having the risk that earnings will always bring, right? So earnings generally are going to be a coin toss for you. So uh, Apple was my pick back then, and I hope people took it, made some money there.
Very nice. I had AVGO is one that I put out last Sunday in my video. I wanted to sell an out of the money bullish put spread. And this is where the stock was on Friday, right in here. I was trying to sell that out of the money bullish put spread all the way down to this 325 level, 325, 320 bullish put spread expiring November 21st for a dollar credit was what we were looking for. We needed a tiny little pullback. We didn't get it. Nice pick. The stock has been straight up since then. So didn't get that trade off, but that would have been a nice one.
I love
How's
the
your
the strategy that you've been advocating because look, myself, a lot of traders have been where to say wary is probably the best word of this move, right? I mean, everyone keeps waiting for that inevitable pullback. It's going to pull back. It's going to be pulled. The ability to swing long comes with a lot of anxiety. However, what you've been advocating a lot in the chat room, selling out of the money puts, doing out of the money bullish put spreads. These are ways that you can participate in this rally without the anxiety of, oh my God, what if it's all of a sudden gonna, reverse on me? Because you're fairly well protected on those trades. Worst case scenario on an out of the money cash secured put is you get assigned the stock at a pretty damn good price. And then on a bullish put spread, you have to break, if you do it correctly, two lines of pretty heavy support. And you have yourself, if you set it up right, about a 90% win rate on those trades. So, you've been advocating quite strongly for a pretty good passive income strategy that allows you to participate in this move up while remaining skeptical of it.
It has been a good strategy, and the reason that it's worked well for me is because I've had a difficult time embracing this rally. Call a spade a spade. I have. I see a lot of things in the background that are concerning to me, be they credit issues. We've had three subprime lenders now go under. We've had banks visiting the Fed's overnight repo window with frequency. That's usually a sign that there are some liquidity issues. We've had a huge fall off in the employment numbers, and now we're in the dark. We don't have any employment numbers. So yes, I've been trading alongside, but I haven't wanted to chase. And so, a good example of using this strategy would be GLW. Well, the news comes out, and let's say that you didn't scoop this stock early in the day, but you like it and you like the breakout, and you like the fact that the stock has been able to hold all of its gains. Well, you may not want to buy it at $91, but how would you feel about owning it here around the $86, $87 level pre earnings announcement? Well, if you feel like that would be a good entry point for you, you can sell those puts and buy the stock where it was before that bullish reaction to their earnings announcement. If you don't get assigned, you're going to generate really nice income. By the way, I've been doing this in the chat room. I think I had 6 or 7 positions expire worthless 2 weeks ago. I had one that I was assigned on that I'm going to take a look at in a minute last
Those
week,
who don't
and then
know,
I've got
things worthless is a good thing.
yeah, well, that's a good thing. That means I'm
Yeah.
generating somewhere between an 8 to 10% return on that trade, and I've got another 6 positions expiring this Friday. They're way out of the money. I could buy them back for pennies, but I'm not worried about them. I'll just let them expire. So, in any event, it's a great strategy, especially if you find yourself having difficulty chasing moves and breakouts to a new all time high. It gives you breathing room. You're taking advantage of time premium decay. But the main thing is that you hold half of the strike price in reserve because if push comes to shove, you have the money to be able to buy the stock on Reg T margin, and you have the mental mindset that you will take assignment because you like the stock. So, how what have you been focusing on? How's your trading gone? What have you found to be successful right now?
You know, one thing that I think affects all traders and is difficult to kind of, it's sort of like that hidden black box on the market, which is what is priced in, what isn't priced in. Obviously we've had this huge rocket boost on the market, right? And so you can look at it and go, okay, is this based on what's occurring right now, or is it based on the anticipation of the rate cuts, the anticipation that, hey, in 6 months, Powell's not going to be there. We're going to get significant rate cuts. Is it anticipation of these trade deals? So then the question then becomes, if those things are priced in, right? So let's say today, you said 97% chance there's a quarter basis point rate cut. So that happens, right? Um, that's obviously priced in. Does the market continue to go up when that occurs? Is a bullish hawkish statement or a dovish statement priced? It's hard to tell. Obviously, a lot is priced into this market, and a lot has to go right for these valuations to click. But we could be looking at a scenario where you get great earnings from a stock, and the stock drops, And people always scratch their head and go, why the hell did that happen? And it's because, all of that was priced into this meteoric rise. Like Apple's been on a nonstop rise here. It's by its all-time highs. So let's say tomorrow Apple has great earnings. Um, Apple could drop on great earnings. Great earnings could be priced in here. Great earnings might even disappoint. That's where the market and trading off a very news sensitive market gets a little bit dangerous in that you don't know how much of this is priced in and what, if anything, if one thing doesn't click, if everything is not perfect, is that enough to start a cascade of selling? That's kind of what happened in 87. It's kind of what happened. Everyone keeps, is there a crash on the horizon? These are these type of, if it is indeed a bubble, these are the type of things that can cause it, which is, one thing starts the domino effect of that didn't go the way we thought it would. Tick, 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 tick. So, that's just something to watch out for.
Yeah, and I personally, I think that number one, we're in a seasonally bullish period. One of my trading axioms is I don't have to be long, but I can't be short in November and December. So cash is a position. If I feel that the market's particularly vulnerable, I can be 100% in cash. I don't have a problem with that, but I cannot be short. And that axiom has really saved my butt most years. There's an incredible amount of buying pressure into year end because asset managers want to mark up their portfolios. They get paid on a percentage of assets under management. There are also bonuses on Wall Street. It's one of the most powerful influences that I've seen over my 30 years. So, November and December, do not short. I believe this market's going to continue to float higher. There could be some speed bumps along the way, and we may be getting one today. So, any dip, we know they're brief and shallow. Those are your opportunities. You almost can't wait for support. You've got to just go in and buy. Well, how do I know the rug's not going to get pulled out from under me? Well, because of the price action that we've seen over the course of the last 8 months. These tiny little shallow dips tell us that institutions are aggressive buyers. If they weren't, these dips would be deeper. We also know that when the market, and bull markets die hard, when the market does finally roll over, you're going to see a big crackdown, but you're going to see a big bounce. And that bounce won't be able to get back to the prior high. When it can't, this is your exit point for long term bullish swing trades. But until then, you go with the flow and you stay long the market and you buy dips because that's what everybody else has been doing.
Interesting question by Market Victor here. What's your take on the market making an all-time high with only a few sectors doing well? Healthcare, industrials, retail, etc., continue to underperform. I mean, look, it's no secret, and it's been a topic of conversation for a long time. How top heavy SPY is, and of course, you can look at the unweighted index and see that it's not. Doing as well. Yeah, I mean, obviously the Mag Seven is carrying the market, but if you had to choose a kind of champions to carry the market, though, you probably couldn't choose better than those. They are shouldering a lot of the burden. What it does mean is, for example, Nvidia just took, Nvidia was up to today all the way up to 211. And when it was, the market was up close to 690. Nvidia starts to drop. It's now down to 205, and the market starts to drop. So, what it does do is it does put a lot of pressure on stocks like Nvidia. If Nvidia is, all of a sudden takes a nosedive today, some news comes out, very hard on that day for the market to get going unless you have those stocks behind it.
Yes. And so if you are trading and if there is a theme that's driving the market, back in 1999, it was the internet, the internet, the internet. Oh my God, it's the best thing ever. Imagine what the internet's going to do for us. So that fueled the market higher. And right now, AI is what everyone is focusing on. So the chip makers are going to be your best bets because they're the ones who are going to benefit from AI growth in the future. And when you look at PE ratios, you could look at them back in 1999. The market still went a heck of a lot higher. I think about 50% higher in 2000, 2001 before it hit its top. Valuations, you they didn't make any sense at all. And they don't make any sense right now. These AI companies, they're not making any money. It's all on the come. And so you can't look at valuations and go, oh, that's overvalued. I'm not going to buy it. You've got to use technical analysis and you have to use momentum. Those are the stocks that are breaking out. That's where the long term money is flowing in. That's what you want to be buying and try and be more passive in some of the other sectors. So, I've
Was
got a
it?
couple of stocks I want to take a look at, Harry, because I have had a couple of problem children, if you will. I did take assignment on a stock, MP. I like to break out earlier a couple of weeks ago, and I sold some $83 puts in here, and now I'm long stock down at $64. My net cost on that is somewhere around $80.80. So I'm munching on that right now. It is above the 200-day moving average. It's in this longer term compression right now. I am going to be hanging on to that position. I'm not worried about it. I have my first starter position on in a stock that I'll be holding. If it starts to rally up, I probably will sell some calls against it. And they tend to be pretty juicy. Governments subsidizing rare earth mineral development. So the company is not making a lot of money on this right now, but the government is investing in it. And no matter how the trade talks go in China, which that's one of the reasons for this pullback right here, is that Xi and Trump are meeting tomorrow, and everybody's going to be playing nice in the sandbox again. This doesn't mean that we are going to stop rare earth development in the US. This takes 5 to 10 years to get going. So I see this as a longer term play.
I am underwater on Tesla. I short Tesla, I think, around 3 days ago. And so I'm underwater that to the tune of about, I don't know, 17. I've made around five the day before. So, overall, I'm underwater around 12 a share on that short. Tesla's obviously weak today, had a slew of bad news coming in, both with NVIDIA supporting Uber's self-driving, auto taxis there, and some bad reviews on their self-driving this morning. So, and also there's the open question of the $1 trillion pay vote coming up for Elon Musk. So there is a you know uh, if it wasn't relatively weak today, I probably would have taken the hit on that. But I'm going to ride this short for a little while longer, see where it takes me. I made a nice paycheck here on SoFi. It's down today. I still kept 3,000 shares of it. I did ride it through earnings. Had great earnings, up around $3 a share on that for around. I had 4,000 shares. Sold 1,000 of that yesterday for $3.50 profit. Doing well there. Oscar, I'm still long on Oscar. Long on Walmart, which is now reclaimed and gone green today. So I still like Walmart as a long. And then yeah, I still have my SPY leap puts, which do act as a nice hedge. So since I most of my positions are long on those days where we get decent pullbacks, those leaps actually pop a bit. So, and they also protect me against any, I can have a lot more confidence swinging the number of longs that I'm swinging when I know that if there's ever some sort of, news that comes out that says, screw China, we're never going to talk to them again, 500%. Okay, fine. The next day, the market's down 50 points. Well, my longs are getting killed, but they're completely made up for by those leaps. They're actually a fairly cheap hedge for me. So I'm fine holding the hedge. The only position that I'm probably concerned about here is Tesla, because that thing could turn around in a heartbeat. But as long as it remains relatively weak today, I'm going to hold it.
One of us is going to make money on that because I'm long it.
Yep,
So,
we have
and I
different
bought it. I
positions
think
there.
I'm long from yesterday. I think around 463. So both of us are leaking oil on it, and you can see the stock has done a lot of chopping around. I do like the fact that it's making some higher lows. It's gotten through the earnings announcement. It tends to carry good option premiums. So down here around this 410 level on this horizontal support, I do like selling a 410, 405 bullish put spread for a dollar credit. And I've got AV WAP, ES support, and that horizontal support that's been touched twice now. So I think that's a good trade if you're looking for one. I could highlight that as my bullish pick of the day. Maybe I will because GLW needs to pull back just a little bit for me to really want to be in that trade. But right now, I'm looking for stocks that have announced earnings. I don't want to be pussyfooting around those earnings announcements. So I will be looking for opportunities to sell naked puts after we get through this news cycle on Friday. So next week, I'll start getting busy again looking at those post earnings reactions, and I'll have had a few days to watch how the stock reacts. One thing that's critical about this, it's very important. I would like to see some kind of market freaking pullback in here because I want to see those stocks hold up well. That will tell me that institutions are still in there buying. Then I'll have the confidence to do that strategy.
Bob has a pretty good trade here in the chat here. NRG. Now it does report next week, so I wouldn't be. I'd be a little bit nimble with this one, but a beautiful breakout. Now I fucking hate utilities. I don't like the utility sector. I don't like utilities in general. But if one were to trade utilities, this trend line break, this compression break on NRG is beautiful. This is a great trade. I probably would wait for a pullback to VWAP. If you get that and VWAP holds, it's a really nice long for today. Might even be a nice swing long going into tomorrow. Um, you got to be careful with the Fed. Anything could happen there. But in terms of a setup and a daily chart, energy is beautiful. Really nice setup for a day trade for a short term swing. Just be careful of earnings and the volatility events. But that is a nice pick.
BE is another energy stock that I like. They are really focusing on powering data centers using natural gas. And you can see the strong, you've seen this before. I've mentioned this stock for the last probably 5 months or so. It has been straight up, and you can see the earnings reaction today. It's making a new all time high. Any kind of pullback, fill in this gap. I'll be looking to sell some puts down here around that low. This is a previous horizontal resistance level that now acts as support. That low is around $88, which puts it just above the 50-day moving average. So would I be a willing buyer of stock down here after a good bullish earnings reaction? And I believe a 52% increase in revenues year over year. Yeah, I like that. And I like the fact that this stock has been marching higher. That tells me long-term institutional investors are buying.
Showing us about SPY Strangle today. What do I look for? Um, I would not do a SPY Strangle on the Fed today, and I'll tell you why. If you look at the move, right? So you're looking at today a $4.63 plus or minus move being projected based on the option prices for SPY. That's a pretty large range for something that is, unless they come out and say no rate cut today, or they come out and say 50 basis point, or Powell comes out and does something unexpected. This Fed meeting should be one of the more telegraphed ones. It's hard to imagine what surprises are going to be in store for it. Um, yeah, I mean, is there a sell the news chance? Of course. Is there a chance that Powell comes out also on the other end and says, we're going to gear up for another rate cut and it's going to be locked in? Yeah, maybe. But beyond that, yeah, the algos are going to come in and they're going to move things around, but I would not be surprised if SPY doesn't wind up pretty much where it starts after the presser.
I'm trying to scroll back to the last FOMC statement, and I believe it was somewhere around September 16th, if I recall. So as I do that, a couple of things. I don't have enough data to go back that far. Actually, now could get there. What I was going to mention is that you're going to see a lot of volatility after the FOMC statement. So this is not a great time to be trading. If you see long mixed candles, that is a sign that the market's not going to go anywhere. And I might have reached, yeah, I've got 20 days worth of data, which is a month. So I didn't quite get back to it. But my point was that
You're looking
if you
at
see a reaction,
the 17th.
you know, 19th is as far back as I'm going, but in any event, if you see long mixed overlapping candles, so a long green candle, then a long red candle, you see giant wicks, giant tails. What that tells you is we're not going anywhere. Okay. It's just the programs going back and forth, and there's not going to be much of a reaction. Now, those swings are going to be huge, but they're very difficult to trade because you're just swinging back and forth for the last 2 hours of trading all over the board, and you're not going to have much of a net change. If you stack some green candles consecutively with very little retracement, that's indicative of a move higher. Same thing on the downside. If you see stacked red candles and one way directional movement, that's going to be a sign of selling pressure. And there might be some short term trading opportunities, but if you don't see that, there's not going to be. Okay. You need those stacked consecutive candles in that directional movement, but don't feel that, hey, this move is going to last overnight either, because the last 2 hours super volatile. Usually the overnight news gets digested and you could have a completely different overnight reaction. So don't read too much into it. This is a good time, especially with earnings coming from Apple, Google, and Meta tonight. You could have a reaction to the Fed, and then you could have a completely different reaction from the earnings announcements after the close.
Um, Market related ETFs, examples are IWM, QQQ, RSP, are useful for evaluating where money is flowing. But to what extent can they be used to assess the strength or confidence of a market move? I mean, the simple answer to that for me is volume, right? If you get this a big move up on low volume, you could be looking at a seller's boycott, right? That, you're not really looking at a highly confident move, but you're looking at just sort of this momentum status quo drift higher. When you get these high volume moves, particularly in an ETF like QQQ, and then you look at stocks like Nvidia, and you look in the tech sector, and you see where it's being led, usually from the chip area. Um, then you can have higher confidence. It's all about what's driving it. And when institutions are driving the move, particularly when it's focused in a sector or an industry, you see the volume there. You see the price action reflect that. You see, as Pete just said, you see these consecutive candles. You don't see this constant need to retest VWAP or support or resistance there. You see it just plow straight through support or straight through resistance on the upside, and it just continues and keeps going. So it's a combination of volume and those consecutive candles without the need to go back and check and make sure that that support or resistance is going to hold. It's like that person who's you're walking away. Do you have to keep looking back and looking back and looking back? And if you just walk straight ahead with your head held high, you don't bother looking back. It's a pretty confident move in that direction. If you're constantly like stopping, looking back, walking back, changing your mind, going forward again, I mean, you get the idea. That's what price action's like, right? So if you don't get those constant retests and you just get it going straight through, that also tells you that institutions are pretty certain about the move and dedicated to continuing it. What else do we got here?
So obviously, the stocks that are going to move the most after the FOMC statement today, they're going to be your bank stocks primarily. And so any interest rate sensitive company, builders, home builders, any large ticket items, car manufacturers, I think Whirlpool announces soon, stocks of that nature, those are going to be your movers. Gold oftentimes will move after the FOMC statement, and that actually has been pulling back as of recently. You can see it's starting to find some support, but it went parabolic in here. So it's not surprising to me that gold has actually pulled back a bit. This is one of the biggest moves I've had, probably the biggest move I think I've seen in gold during my career.
Yeah, gold outperforming even Bitcoin in terms of if you put your money in one of the two. Gold has been one of the best performers out of anything, really. If you can go back, a year ago, and you choose where to allocate your money, gold would be pretty close to the top of the list, even despite the recent pullback. But still, it's done a hell of a job. And there was an interesting discussion in the chat room because yesterday, I believe one of our moderators, uh, said even after the move occurred, went long Nvidia, right? And you saw Nvidia obviously make this monster move yesterday, basically going to all-time highs, $5 trillion market cap, and most people looked at that and said, "What? How could you take a long here at after a monster move like that, looking, you know, breaking through? Aren't you afraid that this thing is going to pull back?" And they just basically like, look at the price action, look at the daily chart. Um, there's only blue skies ahead of it. There's nobody ahead of it looking to sell, because they've been underwater when that's what happens when you break an all-time high. And they went in with just pure confidence based on the chart and the price action, whereas other traders looked at that and had such trepidation because of that mindset problem of, oh, this should be avoided, or you should short this after a move like that. And instead, Armad just went, balls to the wall, and took the long, which turned out to be a great move. And I think they took profit earlier this morning off of a beautiful open on Nvidia. So that is really a testament to the one of the big differences between a profitable trader and someone who has mastered that mindset, emotional aspect of being afraid to take a long like that, and someone who has the experience to know that's still a good long to take.
Exactly. And if you look at what is driving the market, market's making new all-time highs. What is driving that move? Where in the heck is the strength coming from? Well, we trade stocks, we don't trade the market, and we want relative strength. Well, where is that relative strength? Well, it's going to be in a stock like Nvidia. AI is the big theme. They are right at the forefront of it, making money when all these AI stocks still haven't. Quantum computing, those stocks haven't made money yet. They may make money, but they haven't yet. Nvidia is actually making money. So you look at this horizontal breakout right here, and you look at this earnings reaction way back in here, and this breakout. Uh-oh, how am I going to buy this? How am I going to buy this breakout? The stock is making a new all-time high. It's already valued at more than most countries. Well, look what happened. It
It's
kept
kind of crazy
right
what you're saying.
on going.
It's
Okay,
worth more
so
than most countries. That is
it,
five
so
trillion dollars.
so you want to be in stocks that are strong. Well, how do I know that the rug's not going to get pulled out? Well, they're not making T-shirts or some kind of BS. These guys are at the forefront of technology, and asset managers are looking at what those products are and what the future demand for those products is going to be, and if they can put a lot of money into it without having to worry about the rug getting pulled out themselves, They're spending billions of dollars on that research. They're the reason that the stock is moving higher on heavy volume. This is not retail Joe driving this stock higher. These are large institutions who are betting that 2, 3 years from now, this stock is going to be higher. And so that's the confidence that you have. Might you not pick the perfect entry point and maybe the stock pulls back a few dollars? Sure, that's possible. But if you go into this with the mentality that you're willing to ride out some short term wiggles in the stock, then you'll have the confidence you need to take a position and you don't freaking go balls out on this thing. You take a starter position, you add on confirmation.
Can you imagine if I, Pete, if I gave you, I think I posted about this once before, but if I gave you $80,000 a day for 150,000 years, you still would not be worth as much as Nvidia, the company, is worth. That's
It
that's just,
is incredible.
I can't even wrap my head around that amount of concentrated wealth in a single company that is $5 trillion, and the fact that it was just crossed 4 trillion like a few months ago. The thing made $1 trillion in less than a year in terms of market cap. And this was a company that 5 years ago uh, basically just made the graphic accelerator in your laptop so you could play video games. It really is one of the greatest company transformation stories of all time. Um, Someone asked here. So my son's trades during his holiday from during his summer break from college, the trades he took, the results he got. I mean, yeah, okay, he got he started with a few $1,000s. I think it was around 6 or 7, something like that he saved up, and instead of getting a summer job, he decided to swing trade based on what I taught him, and he made more money over the summer swing trading than he would have if he got himself a summer job. Obviously, he had close to I don't know, 50, 60, I don't remember exactly the return because he kept pulling money out of the damn account so him and his girlfriend could go out. But they, he did really well. And look, he used Option Stalker. He went in basically focused on Pop Bear and Pop Bull and Red Royal Flush and those top ones, and then looked at the charts of the ones listed there, and took some deep in the money options on either side, and then pretty much I think he had a string of like 12 or 13 winning trades in a row off that. So he did well, and I'm sure he'll continue to do that when he comes home for winter break. It's a nice way to make extra money without having to serve coffee at Starbucks for minimum wage.
Yeah, you must be very proud. That's a heck of an accomplishment. No one in my family has wanted to trade, and that's okay. They know what I do, but uh, to be able to grasp it that early, boy, I wish I had. It took me a long time.
Well,
I
he's also picked up my gambling, that part too. So he plays poker. Um, I'm glad he hasn't picked up any of the other bad habits that I know of, but who knows? You never know what your kids wind up doing. But yes, I'm very happy that he took to it. Obviously, he's good at math. He went to Berkeley for math, so uh, you don't need to be good at math for to be good at trading, but what you do need is, and you can learn it obviously, but a sense of pattern recognition, because price action in these charts, they're all patterns, and they all reflect human behavior, human desire, greed, fear. It really is a seesaw of greed and fear. And when you look at these charts and you look at the patterns, you can kind of see what what you're looking at. When you look at a stock like the pattern on a stock like Apple, you're seeing, these a nice upward trend with these kind of moments of fear in there as it dips and goes up, dips and goes up, but it's just constant one leg up, compression, leg up, compression, leg up, compression. These charts tell a story behind the mindset of the people that are putting money in or taking money out of these companies. And you just got to, over time, you learn how to kind of read those tea leaves.
I do have a question on Caterpillar. Would I buy it? And if it's able to hold these gains? So, a couple of good components to that question. One is if it continues to hold these gains. So, right after the earnings announcement, you don't want to dive right in. You want to wait 2 or 3 days because this is going to attract some sellers. For right now, the sellers have been kept at bay. So any supply of stock, and why are there sellers? Well, anybody that bought the stock way down in here in the low 400s is going to be anxious to take some profits when the stock is currently at $600. So that selling pressure is going to keep a lid on the stock. How much of a lid, we don't know. But if they're able to drive this candle down, then you know that sellers actually have some pretty good say in the matter. If most of this candle is preserved for the next 3 or 4 days, then you know that long term buyers are seeing that CAT is turning a corner, that it's got really good prospects, be it in mining rare earth minerals, whether it's building data centers, whatever it is. Perhaps the housing sector turns around because interest rates are coming down. Whatever it is, you know that those buyers are going to continue to be in that stock. So, how do you approach it? Well, there's another instance where you can sell an out of the money bullish put spread. And so, I took a quick look at Caterpillar. And if you sold the 540 puts, which is below that open and below that high, you've got that open to lean on. You've got that high to lean on. You could sell a bullish put spread 540, 535, November 21st expiration, very wide bid ask, 30 cents bid offered at 265. I would need to get at least $1 for that. I don't know if I can get filled at that price. So I would start with maybe $1.20, see if you get anything done. If not, you can come down to $1.15, $1.10. Keep trying, see what you can get if you're comfortable with this price point right in here. What is the price action that I'd like to see over the course of the next few days? I'd like to see more than half of that long green candle preserved. If it is, then I know the selling pressure is going to be fairly minimal and that long term buyers are coming in to support the stock. Grind, grind, grind higher. Good. Now I know that long term money is in and this stock is probably going to continue higher. So that's how I would play Caterpillar. I do have a question on J&J, so let me get to that real quick. That was a stock that I highlighted 2 weeks ago, I believe, in my video. Yes, 2 weeks ago. And the stock was here post earnings. We bought a 190, 195 call debit spread, paying $3 for that. It expires November 21st. And you can see how the stock has fallen back. I found out couple of days ago that some of the selling pressure is related to a talcum case. They were hoping to be able to reach a settlement. They weren't able to. So now each one of those cases will have to be tried separately. That increases some of the company's risk exposure. Am I worried about it? No. Why not? Because those cases are going to take many years to play out in court. So short term, it's not going to have an impact. But what it did do was some of the speculators in here that were looking for a settlement are now getting out of the stock because it's like, I don't want to hang out in the stock for another year or two while these cases are pending. So we're seeing that selling in here. What would I do? I want to see this 185 level, this low post earnings. I want to see the stock find some support in here. I've got plenty of time in it, and I would like to see it find support and gradually start moving higher. We know based on this price action here that long term buyers have been in the stock and that at very minimum, it will make a lower high double top. Okay. So my objective here will be to buy the 195 calls back in, let the 190s run, and let the stock continue to move higher, and then I'll exit the position. So that's a game plan. No hurry. It's a call debit spread. Risk is defined.
Someone mentioned Nike as a good short. Les Rose in the chat. I like it. It's in the gap here. So the gap started at 69.69. Interesting price. And closed at 62.73. So it's right in the middle of that gap. It's below the upward sloping trend line. It's below all SMAs. It's below the EMA 15. It's relatively weak today. So yeah, I like the Nike short. It's pretty much a textbook short there. I don't know how much of a move you'd be expecting on that, but I do like it. And you probably will, if you stick to that, you have very clear guidelines of where you'd want to get out when you look at that, and re-enters back into the compression above. So I think that's a good pick.
Follow up on cat. So halfway point of cat is held. So then what? Then what do we do? Well, the halfway point right now is kind of around that opening price. Excuse me, it's right around in here. So if it comes in here and it holds for 2, 3, 4 days, has decent relative strength, what I'd love to see, and I mentioned this earlier, I'd love to see a market pullback. Give me a freaking down day in here. When you get that down day, what did Caterpillar do? Did it hold these gains? Did it give them all back? I don't want to see that. I want to see nice, strong relative strength because that tells me that long term buyers don't care that the market is down today. They want to buy Caterpillar for the next 2 or 3 years at relative strength. Regardless of where it happens in this long green, I'd prefer to see it above the midpoint, but that tells me this stock's going to go higher. That warrants a starter position. 1/5 of the total position that I would be willing to take in that stock. 1/5, 20% is all I would take. No big deal. Okay, stock moves down. I'm not freaking out about it. It's a small starter position. Then what? Then I want to see the stock take out that high. If it's able to do that in short order, a week or so, that tells me buyers are snapping it up. And that would be the confirmation that I'm looking for. I could add another leg to the position, but it has to happen quickly. I don't want it floundering around here for the next 20 days trying to get through that high. That tells me there's resistance in it. So I want it to move and I want it to move quickly. That's how I would trade it.
Someone asked, considering the NVIDIA discussion, maybe an elephant in the room kind of question, but what is your take on the opinions predicting a huge AI bubble similar to .com? Thank you. Um, I think I mentioned, I don't know, a few live sessions ago with Pete that I had a friend who worked in Meta AI, and he told me that the kind of proclamations that AGI was going to be coming in the next 2 years, year or two, was overblown. That he doesn't see AGI in the near future, particularly among the LLM models. Now, I am by no means anywhere near. I'm barely competent to speak to that, but as most of us are. However, what I did find interesting and added some support to what he was saying to me was the Microsoft deal yesterday. Microsoft did a deal with ChatGPT, OpenAI, and basically said, hey, we get 20, 30%, whatever of your revenue until the year 2030 or until AGI, as determined by a panel of independent experts in the field. So, what that tells me is Microsoft is pretty fucking confident that they're going to get 5 years worth of shared revenue with OpenAI, um, that isn't going to be interrupted in a year or two if all of a sudden AGI is declared. You don't make a deal like that unless you're confident that you got that 5 years of runway to keep collecting that revenue. Because if AGI is declared any time before 2030, that deal becomes null. They don't get the money anymore. So that, more than anything, to me, was like a little canary in the coal mine, coming out and saying that AGI is not as close as some have said. I know Elon Musk famously posted a week ago or so that AGI is like, a year or two away. Well, that Microsoft deal certainly would suggest otherwise. And if that is the case, and a lot of this, not all of it, but a lot of these pumped up prices are based on the advent of AGI. Why is that? Because, like Pete said earlier, other than NVIDIA, a lot of these companies aren't making money. You start making money once you get AGI. And if AGI really is that far on down the road, yeah, then that's where you're looking at bubble territory.
Predicting bubbles is a horrible thing. It is going to, number one, keep you out of the market, and you're going to watch stocks continue to go higher because you're a scaredy cat. You can't engage. And the next thing you know, the market's up 100%, which is what happened in 1996. Alan Greenspan, the Fed chairman, came out and made his irrational exuberance statement based on stock valuations. Said all of you investors are in for a world of hate because this is a massive bubble that's forming. Guess what? Stocks went up 100% in the next 3 years. And so this is like a herd mentality. Okay, when the market starts to identify a new theme and the next big thing, it just goes and you don't know where the top is going to be. And right now, yes, this is feeling awful climaxy. Sure is. It can go one heck of a lot farther. And what fuels the move is idiots who are out there trying to short this because every time they have to cover their shorts, they fuel the next leg higher. So be very careful not to try and time or pick bubbles. Just follow the price action. And so when I see this, it tells me be cautious, look for a dip, not because you're going to be shorting it, but because you're going to be looking for an opportunity to buy and enter. Let it go as high as it goes and don't worry about that. But you will know when you hit that top. Typically, a buying climax is going to end with a parabolic move. You're going to have a gap up to a new high, and you are going to see selling in that same day like you ain't never seen before. There won't be an uptick because the bottom's going to fall out because now the buyers are gone. Right now, there aren't any sellers. So even on light volume, it can tick, 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 tick higher. And when you reach that climax and you have that gigantic bearish engulfing candle off of the all time high on a chart, okay, it still doesn't mean you should short, but that does mean that there is definitely going to be a pullback and some short term pain. And then you start looking at how deep and how swift that move was. There's time. What I'm trying to tell you is this is not going to go from a raging bull market to an overnight massive, massive market drop. It's not going to happen. You're going to get that lower high double top. So, with that confidence, know that you can take starter positions and add to those positions on confirmation.
Brings me to my long of the week. I would choose AVGO. AVGO would be my long pick. It's broken through here. It's at an all-time high. It doesn't have earnings until December. Uh, Broke through the high of yesterday. Very strong today. Already tested the SMA 50. Like nothing is standing in the way of the stock right now. To me, this is about as and it just tested VWAP right now. So if in terms of an entry point, obviously, all caveats aside, is FOMs, the Fed coming out today. You have major tech earnings, so you have to be wary of taking any tech positions. They are going to be affected by what Apple says and what Google says and Meta says and Microsoft says, because they are all part of an interconnected infrastructure. So yes, all those things will affect it. But if you had to take a long right now, the chart I'd like is AVGO.
Well, I like it. I liked it last Sunday. Just couldn't get filled on that dang bullish put spread. But
Great pick.
look at that price action. It's just absolutely beautiful, on heavy volume. Institutions want to own it. Yeah, really solid pick. I think I'm going to stay with GLW. I like it. I don't think it's too far out of the gate to even
Hmm.
take a long position here. It's breaking out of this longer term D1 compression and right up in here. So you can see how the stock ran up and then it was in this nice tight compression. So I don't feel like I'm chasing the stock. I would prefer to sell some naked puts ahead of major news right now, right down around this opening price today. If I can buy it around that breakout, I'd be happy to. And sometimes you'll get stocks that will come back and test that breakout again. So yeah, I like GLW. I think it's going to continue to move higher, and it's another post earnings play.
I would just caution everyone to be careful on the Fed move. You are going to get these algo based moves right after the announcements. It'll say quarter point rate cut, whatever. You'll get that move. Um, what you really need to watch for is during the press conference, how are they reacting to what Powell says? Is he coming off dovish or hawkish? But as Pete said earlier, what you want to see is the consecutive candles. If you start seeing this, huge drop and then big red and then big green candles, and you basically wind up right where you started. Um, you, that's not the type of move that you want to engage with. You want to see some consecutive candles in one direction or another. You want to give the move time. You don't want to jump in too early, and you certainly want to wait for that press conference to kick off and see what the reaction is to what he's saying. And a lot of it's not just going to come down to what Powell's saying, but because Powell's obviously not long for this world here in that position. Uh, but what other people, the other Fed members, have said? Is this, sort of, was it evenly divided? Were there people who felt there should have been no cuts today, or are they a lot of people? That a lot of that's going to factor into the market wondering, trying to read the tea leaves as to how low these rates can eventually go.
Yeah, and so we would like to see a pullback in here
That'd be nice.
because this is a very fluffy move. We don't usually get what we want, but we've got earnings. Maybe there's a little excess optimism in some of those stocks, and maybe they pull back a little bit. So, what would I like to see? What's my ideal setup over the course of the next week or two or three? My ideal would be here's your previous resistance level right in here. Here's a little fluffy move that I would love to see get erased with a nice long red candle or two. And then when we test that breakout, we don't spend even a morning there. We fly right off of it. That tells me that buyers are engaged. The people who are wishing that they had bought this breakout right here are not going to mess around. It's not going to, the market's not going to flounder around here. It is going to lift off from that level. If you see that type of price action, this little pullback is going to tell you which stocks are the real deal. And a stock like BE, I would like to see it preserve that breakout, pull back, and have relative strength. Can't pull back, can't pull back, can't pull back. That's what I'm going to be selling naked at the money or out of the money puts on it. That's what I'm going to be buying stocks like that. I'll have earnings behind me. I'll have confirmation that it wants to move higher, relative strength, and I've also got year end seasonal bullishness working in my favor. And there's another little chunk of good news pending out there, which will be sooner or later, we're going to have the government shutdown ending. And when that happens, I think that's another upside catalyst into year end. So those are the types of things that I'll be watching for right now.
Well, Pete, what they say, we may not always get what we want. We may not always get
That's
what we need, just as long as we don't get what we deserve.
all right. Well, I think that that kind of wraps up all the questions today. Thanks everybody for attending. Thank you, Harry, for your analysis. Let's take a
Have a
break
good
and see
week,
what the
everyone.
Fed
Good
does.
trading.
All right. Talk soon.
Talk soon.
Trade well, everyone.
Bye, guys.